Good afternoon, everyone. I hope you're having a good afternoon. So today is 18th of November. So we're going to start off our webinar for today. You remember the topic for the day is how to set your stop loss correctly. So there are some few things which I have to say before we start off. I have to say what stop losses are. I'll also mention briefly what take profit is. And I'll also look at the best way to calculate your stop losses, and that is the best way to come up with the lot sizes, because it's almost impossible for us to talk about the stop loss if you don't know, first of all, how to come up with the lot sizes. So the most important thing in trading is actually the stop loss. The most important thing in any given strategy is actually the amount of money you're willing to risk in that given trade, and the criteria with which you set the stop loss itself. So one thing, most new traders, let's say, they have very good strategies. They read some strategies online, they find some strategies online, they read those strategies, then they try them on the real chart without knowing exactly how to set their stop losses. What they don't understand is that how to set your stop loss is actually the most important thing in any given strategy. How to set your stop losses is always the most important thing. So another most important thing is lot sizes. How you come up with the lot size. How you come up with the lot size. It's one of the most important things. You must understand how to come up with the lot size. How to calculate your lot size correctly. You must understand this. So in a previous webinar, we looked at how you can calculate your lot size correctly. Now we want to look at how to use the lot size to come up with the correct stop losses. So first of all, just a small recap. We want to write the formula here for calculating the lot size. So lot size, if you want to calculate the lot size, is equal to amount to risk divide by stop loss in pips times asset value. So this is the formula. This is the formula that we use if you want to calculate the losses. If you are finding it hard to calculate the correct losses based on your balance, you can use this formula to calculate the losses. So the amount to risk here, this is basically a percent. Maybe you want to risk 5% of your account. You want to risk maybe 2% of the amount you have in your account. You just need to set here. You write 5%, calculate 5% of the amount of money you have in your account. After that, after get the 5%, divide that with stop loss in pips. So stop loss in pips is basically the distance between where you are entering trade and where the stop loss should be set at. So if you enter, maybe assuming enter 0.01, if you enter here 0.01 here, the stop loss in pips is basically the distance between your point of entry and the stop loss itself. So the difference between the point of entry and the stop loss itself. So if you have your entry here and the stop loss is here, then the number of pips is actually 652. So 652 is the difference between this and this here. So around 652. And then the asset value is basically the value per pip for this given currency. So for GBPUSD, the pip is, let me just give me a second. Let me create a simple script to display that on the screen so that you see the value for that given symbol. Give me just a second. It should be up. Do not get confused here. Whatever you risk can be in pips or can be in cash, in dollars. So when you're setting the stop loss, you have to understand the amount of money you expect to be risking in pips and the amount of money you expect to be risking in cash, in dollars, sorry. So just a second, let me put that down for you for value. Just a second. Comment pip Just a second, we'll have that up just now. Correct. Okay, now we have look at this here. Okay, what this simply means is per every pip, the value per pip for this currency is actually 10. So this is the amount of money you're risking in dollars, then this is the amount you're risking in pips, then this is the pip value. So you divide the amount of money you are risking in dollars, divide by pips, stop loss in pips. That's the difference between the point of entry and the stop loss, and then this is the asset value. So the asset value varies depending on the symbol you're trading. It's not the same. It's the same for USD, yes, but it may not be the same here. It may not be the same with USDHF. It may not be the same. So it keeps varying. It is one of the most important things you have to understand, that the pip value is always different depending on the pair you're trading. So there's no point if you are assuming you're risking maybe $10 on USDJPY. Just understand that pip value for USDJPY is different from pip value on EURUSD. You must understand that. It's also different here, because this one, the pip value is 50. Here 50 on gold, it's 10. Silver AUD is 50, and then silver USD is 50. So you can see the difference. You can see that it actually keeps varying. So whenever you're setting your stop losses, understand that properly. Understand that the pip value for all these symbols are different. They're not the same. So whenever we are saying the amount of money you're expecting risk, just take into account that different pairs have different pip values. Do not set a fixed amount to risk on all of them. If you have to do that, then you must know how to create, how to work with lot sizes. I mean, how to work with stop loss in pips, and this on the amount of money you want to risk in that given symbol. Okay, now we've seen how to calculate the lot size. Now, how do we set your stop losses correctly? Yes, you may say you want to risk maybe 5% of your account, 2%, maybe you want to risk $10 from your account. How do you calculate the number of pips you want to risk in a given trade correctly? How do you calculate this? So there are two ways to do this. There are two ways someone can calculate their lot sizes correctly. The first one is by looking at the nature of the previous candles. So what I mean by the nature is you look at the high, the low, the size of the previous candles. Then you use whatever you found from those candles to set the stop losses and the take profit. So what that means is this: assuming we have this level here as a resistance level, we have this level here as a resistance level. The price came from this point, the price moved up, there's this move down, it moved up, moved down, up, down, and then there's a massive move to the upper side. You can see numerous tails, and the price continued down. It came back to this point, and as we're speaking now, you can see that the price has actually gone beyond 1.32649. So this is a good place to look for a sell from. The place where we are now is actually a good place to look for a sell from. So how do we sell this based on the first criteria? Like, how do we sell this and then you set our stop loss correctly? Okay, the method is simple. You'll sell it here, sell this symbol when the price reaches this place. You can sell it still now. You can sell it. Your stop loss, you fix it at the top, at the highest of the highest tail. So if this is the highest tail, you have to have your stop loss above it like this. So you'll pick a sell correctly, you'll pick a sell somewhere there. Your stop loss, you have it at the tip of that tail, above the high of that tail. That is one way. The next way is this: assuming you have a support. Yeah, this is another example. you have a very good support. The price has been using it. The price goes up, comes back down. There are several tails. It goes up, comes down, goes up, comes down, and then there's this massive tail. Okay, how I normally do this is this. You can see that assuming you saw this, assuming you are monitoring this level from this price, from this point, you are here when this was happening, you are here when this was happening, then you say that when the price comes back, you're supposed to pick a sell. If you took a sell here, you are actually stopped out, because most probably you had your stop loss here below this, because this is the longest tail. You had your stop loss there, and this candle came and touched that point before eventually heading to the upper side. So how do you counter this? How do you counter a case where the price goes up to your stop loss before it moves back your way? So this is how I do it. Yes, I'll see this as the longest tail, I'll see this as the longest tail, I'll see this as the longest tail. So I work with the latest longest tail immediately after that longest tail. So if I have a tail here, I have a tail, I have a tail, I have a tail, then the price goes up, I see, like, then this candle now goes down and breaks below, forms a new low, but ends up closing above. That is when I enter trades. If there is no tail which has gone below the previous one, I don't do anything. Like in this case, I'll see this is the newest tail. I'll not enter because this is the first time. The price goes up, it comes down, then this is another tail. The price goes up to below the previous tail. It goes below the previous tail but close above. This is when I enter trade. I'll not enter the next one, I'll not enter this one, but I'll enter when the price comes back again to the lower side but closes above. So anytime the price forms a new low but ends up closing above my zone, I trigger trade. So I keep monitoring the lows that candles are forming, because chances are that if this is a level and you're not the only person who is seeing it, many people are seeing it. So when many people are seeing it, there are extremely high chances the price is going to break below it. So I wait for price to attempt breaking below it. Then if it comes back and closes above my zone, that's when I enter trade, and then I fix my stop loss below. Does this make sense for you? Or whatever I'm saying now, does it make good sense for you? That you have to wait for price to form a new low. That is, you want the price to try breaking below the low of the previous lowest lows. When that happens, and then the price ends up closing above, you enter trade. Okay, we'll look at a new example. Just a second. Oh, let me check that. Okay, there may not be very many examples, but they're there. We'll have just to get them. The same chart on a lesser time frame. Okay, so what this means is you first of all have to know how to draw your levels correctly. You must find the best way to draw your levels. We've also looked at this in one of our webinars. We've looked at the best ways one can draw their levels. Just a second. Let's see. Okay, assuming you had this one here, you had this level, you had this level as a resistance level. So the price forms a tail, ends up closing below, it continues down, it comes back to the same place, it continues down, it comes back to the same place, then it forms a tail which is way bigger than the previous tail, but it's just around the same place. So this is still some confirmation that we are somehow into a sell. You may not have a way to compare the tails, or you may compare the tails literally, but this is a confirmation that we are somehow heading to the lower side. So if you pick a sell after this tail, you're supposed to have your stop loss above that tail. Have your stop loss above this tail. If you want to be safe, have your stop loss above that tail. Just a second. Okay, we have another one here. So this is a good example. We have a resistance level. So we start off from the left side. The price comes from the past. Then we have this. we have a very good resistance, but there's a tail which is very long. So because this is the first time this level is used as a resistance, we are not doing anything. Then look at the next example. We have, yes, a tail, but it is below the high of the previous one, so we can't enter this, because I've mentioned that the tail which we're trading must be higher than the highest tail we've seen around the same place. So the price continues, then there's this candle which has a tail which is higher than the previous one. So after this tail, we trigger a sell, because if you draw a line here, you can see that this tail is actually above the high of this high. So we'll pick a sell and have our stop loss at this price above the high of this candle. Does that make sense? Are we clear? Are we on the same page? That is. So that's basically how I set my stop. This is one criteria you can be using to set your stop loss. So the first thing is this: identify a key level. That's the first thing. Identify the level which has been used previously, which is being used consistently. Identify the highest tail that is protruding from that level. What I mean by protruding is this: if you have this as the level, then this tail, this is protruding, it is outside, this is protruding, this is protruding, this too is protruding. So if you find a level, the first thing is to get a level, look for the tails that are protruding, then find the highest tail. In this case, we have this as the highest tail. Then wait for price to hit the same level again and break above that highest tail. That is, wait for price to come back to that level and attempt to break beyond that level. Then you pick a sell while the price was above that highest tail. Yes, this may be the most riskiest place to enter trade, but it's actually the safest, because normally the price will attempt to close below, and immediately it closes below, you are already in money. Are we clear? Are we on the same page? Do you understand whatever I'm saying? So we'll not enter anything. We're not going to enter anything until when the price attempts to go above the highest tail. If that happens, we enter trade blindly. If the price attempts to break above the highest high so far, then we'll enter trade immediately without thinking of anything. So this is the first way we set our stop losses. The next way is this: we use an indicator. We use an indicator, and the indicator which we use is actually the zigzag indicator. We work with the default settings. So if you want to use the indicator, I'll change the appearance so that it's a bit big and dark, so there's the difference between it and the candles. Okay, that's what we have. So if you're using this to set your stop losses, you must be conscious of the highs and the lows of this indicator. These are the highs. This is a high, this is the low, this is the high, this is the low, this is the high, this is the low, this is the high, this is the low, and this is the high. Then you have this here as the low, and then this is the high. We have low, and then we have high, then we have low. So if you are looking at this chart now, assuming you enter buy position, maybe you are looking at this as a resistance. You had this as a resistance, and the price broke above it, so somehow you took a buy position. Your stop loss needs to be below this low. Is this clear? So if you took a buy, here, you took a buy at this price, your stop loss needs to be below this low. And if you took a buy maybe when the price has gone above this high, this is the high, then the price has broken above, so maybe you took a buy, your stop loss needs to be set below this low. And if you took a sell, maybe assuming you now took a sell here, your stop loss needs to be fixed above this high. So I hope you understand what I'm saying. This is the simplest way that if you're just anyone trading, you must know how to set your stop loss correctly. So use this indicator. It's really useful for stop losses. So you'll have it here, you enter sell, your stop loss is here. So I've said before, you must be aware of this distance, because this is what will help you calculate the lot size correctly. You also must be aware of the amount of money you expect to risk from your account. That way you'll ensure that you put the appropriate lot size, because the distance between this and this is not the same as the person who enters a buy here, then they fix their stop loss here. The distance is not the same. So that means the stop loss you're setting is not the same. I mean, the lot size you are setting for any given trade in any given instance is not always the same. So you must know how to set your stop losses correctly. You must know how to fix your lot size correctly. That is the only way you'll be able to make it. Otherwise, there is nothing you're doing. If you can't set your stop losses correctly, you can't calculate the lot size correctly. Learn how to do those correctly before you enter any trade. So we have looked at this in our webinars. We've looked at how to set your stop loss correctly. We've looked at how to calculate lot sizes correctly. We've also looked at how to take profits appropriately. So thank you very much. That should bring us to the end of today's session. I will meet again next week at the center. So thank you everybody. I'm really grateful that you are able to tune in to listen to this webinar. Kindly feel free to comment, like, you can share your opinion, what you think about this indicator, or if you need me to talk about any other indicator which I have not talked about, or maybe you want me to repeat something which you found not clear, kindly feel free to show me. It will be really good to hear from you. Thank you very much. See you next week.